Ladies and gentlemen of the crypto space, we're live on a Friday, March 31st. It's the end of the month at 11:33 a.m. Not bad, on time. I could be on time at times. So, in this particular spot of the markets, it's imperative to talk high level, general, to folks that probably should be in markets, that aren't in markets, and they need ideas in their mind how to be in markets in a sustainable fashion. We want to help folks avoid the frenzy, the euphoria, the irrational behavior that causes and accounts for the vast majority of people literally losing everything, losing money they don't even have, losing money they borrowed, losing money of other people. I love to tell people it is imperative, it is an existential requirement to engage with markets. You need to be in markets. Therefore, you need to survive. You need to have a capacity to find comfort, which means you need a methodology to navigate. You need to reset. Look at the number one on the list. You need to reset your expectations. First and foremost, expectation should be not money. So what does that mean? What are the methodologies? What is the strategies? First and foremost, education. Look at what we talk about. Look at all the shit that we talk about over the years. Look how deep and complicated it is. How do you expect to compete with people that have the sophisticated perspective that we approach markets with? Look at all the traditional financial macro investigation we've done over the years to understand the relationship between the traditional financial system and international emerging markets, the crypto markets in this instance, because that's where I see the vast majority of opportunity. And there's some great investors that think very much alike, and I clearly am aligned with the vast majority of their perspectives. Raul was spot on, remains spot on, and likely will be spot on because he's rational. It's a great story that he tells, and he's right over time, which means you need to survive to experience that amount of time. So reset your expectations. Stop trying to make money. You make money as a repercussion, as a knock on effect of being in markets and surviving in markets over time. Time is a multiplier. So by being in markets for every amount of time, money will come by making the appropriate rational choices. Now, there is obviously the PvP perspective, player versus player, which we've engaged in. We've engaged in that activity. You've all seen me in 2020, 2021. And am I fond of that behavior? No. Was I thinking about that behavior? Likely no. I did not have the robust perspective that I have today. Clearly, results have altered that perspective. I experienced outperformance. I've experienced large losses. At the peak of losses, I was down 85%, 80%, give or take. That's an experience. Would I duplicate what I did? I cannot duplicate what I did. I'm different because of what I did, one. And two, it wasn't planned behavior. That behavior was not calculated. It was emotional. And the most important things I've learned is you cannot go back. You need to move forward. And the story that I tell you now supersedes any story that I've told you in the past. The vast majority cannot succeed using their emotions to allocate capital. The vast majority need to learn from the stories that I tell today because many folks would say, oh, but the captain made X amount of capital trading, player versus player, and doing activity as such. But that's not the learning lesson. And that does not negate the stories that I tell today that what is he talking about now? He made his money a different way. That's not what's most important. What's most important is survival. And what's most important is understanding why that money was made. And the sheer luck is important to appreciate. Size, number two on the list. We'll look at some charts, but these four items are mission critical. Size is your adversaries. If your intention is to not necessarily be comfortable in markets and not necessarily just focus on survival, and you want to play PvP and you're at the end of your rope, you're frustrated, you have no opportunity in the rest of the things that you do, and you're just here to either win everything or lose everything. That is unfortunate. I feel for those persons engaging with the market like that. Aspiration is a very emotional topic, and I could definitely see how we're in that state of a society where that is a very common feeling. I would encourage folks to do better, to seek education, and that relieves anxiety, frustration, stress. There's plenty of other components to financial management than just trying to make money and just trying to manage capital. That's only part of the equation. The most important thing is to have a sustainable work-life balance, sustainable economic structure. Are you spending more than you make? And we're not going to get into that. We're here for crypto. We're here for that side of the equation. Now, I could end that thought on you really can only entertain making money and capital management and the shit that we talk about on the stream is if you have a stable financial structure. If you spend less than you make, that is a very critical thing to execute rigorously. And folks, I could just resort or call upon Charlie Munger. Your first $100,000 means everything. If you need to take the bus, if you need to if you need to do radical things to balance the budget, that's what you have to do. Why? Because we have one chance at this, one chance to succeed, one chance to do better, one chance to do as well as we can. So that's that. Outperformance. I didn't understand what I was necessarily doing in 2020, 2021 with regard to capital gains and getting multiples, 3, 4, 5, 10x, so on and so forth. You need to understand who you're engaging with, the vested interest, other parties, because they're trying to do the same exact thing, and they're doing it with size. Money makes money. And you're seeing these LP positions, this Uniswap. What is this Uniswap? Now, with size comes power. If you could own a good percent of an entire LP position, 50%, 60, 70, 80% of a Uniswap LP position, you're going to do just fine. You're going to be capturing the vast majority of transaction fees, and you can exit with capital gains when there is an opportunity. And that is powerful. But you can't do that without size. You're not going to be able to engage with the Uniswap or LP positions without size. And size means relative to your peers, relative to the other people that have added liquidity to the LP and other people that are trading. Size pushes markets around. It causes behavior. If you have a $10 million market cap asset with vast majority is liquid. Let's say $8 million worth of liquidity, and someone comes in with $2 million, they're going to significantly move the market, and they're going to push the chart up. Pushing the chart up draws in more capital, smaller actors. I mean, how many? No one, anyone who has, if I had $2 million to allocate and someone just bought with $3 million, you think I'm going to allocate? You think I'm going to buy after someone with that kind of size bought? No, no, I'm not. There's another asset, another opportunity. So someone with $2 million going into an $8 million liquidity situation is going to draw in the smaller actors, five, 10,000, $100, and it's going to drive the price up. Every transaction drives the price up. 50%, it's up 100%, it's up at 200%. So someone that came in with $2, $3 million and it's up 100% in a week, are you not going to sell it? You just made $2, $3 million in a week? Who gives a shit if the slippage is 50%? You're going to make $1 million, $1.5 million in a week off 100%. Done. This is why you have to understand this reality of markets with $8 million circulating liquidity. This is who you're up against. You're not going to turn $100 into $10,000 when someone dumps $2, $3 million of an $8 million market cap circulating liquidity asset. They're going to capitalize $1 million in a week, and that's going to totally suck the appreciative tone, appreciative pressure out of that market, and there it's done. You know, you sell $2 million, $3 million worth of assets in a week on an $8 million circulating liquidity supply, and there goes all the bullish momentum. So if you do need to inspect the holders list. So let me pop it over to the main screen. I'll go back here to finish off these four important things. Etherscan, pick a token, find the token. You know, this is maybe a bad example, but this is an example. Inspect the tokens list, and you need to know who's allocated. So a better way, uniswap.info. Do you see holders on uniswap.info? Let's see. Pools. You need to know if there's large actors in pools. Now, this is not necessarily the best example, but you can see the activity. So, and you could look back. If someone comes in with a large amount of capital, you now have their address and you can track their behavior. So this is a bad example because it's Ethereum, the WETH wrapper contract. Oh, not this. This is the LP for Uniswap, but we were looking at here. You could also see size of positions in particular contracts. But the point is, if you don't know your peers, you don't know if you're just getting sucked into their capitalization on you. It is very hard to outperform small amounts of capital. Charlie Munger's $100,000 means a lot. With 100,000, you could turn it into 120, 110, setting expectations as reasonable. 10x's are very difficult and require either sheer luck or size. Now, this is completely distinct from the concept of dollar cost averaging and, structuring just a long-term portfolio. But that is not the typical behavior. So I'm addressing right now a population that is likely going to be susceptible to duplicating the the exuberant behavior of 2020, 2021, 2016, 2017, 2013, 2014, and GameStop and AMC and all this bullshit that people do. You might as well understand the psychology of what you're doing and what other people are thinking engaging with you. It's a predatorial environment. It's a the biological analogy stands. So, with all of this being considered, it's better to do nothing rather than something. You have to find the understanding and conviction. And when you do, you're able to execute strategically. So this is why people say, know your ins and outs, know your limits, know when you're going to sell, set your targets. So that helps with the process. Why? Because it's a process. Please think of these things as the markets eventually start to experience volatility. Volatility to the upside. I know most of you are not necessarily shorting, but volatility to the downside if that's the case. Volatility is the significant change in price in a particular direction. And that affects psychologically other people to engage with the markets, usually in that direction. Markets have momentum. And this is exactly why when you start to see breadth, BREADTH, go up, you see a chart going up, but then it starts to go up slower. The market starts to go up slower, that psychologically incentivizes people to capitulate. Be like, oh, it's probably not going to continue to go up, and that's when you have a leg down. So that helps. But if you have $100 in something and it's going to have a leg down to 80 and you're hoping for 10x and you're holding on for that 10x, don't do that. Store. I don't remember the Twitter handle with all the stories of people of what they went through in 2020 and 2021. The few people that excelled and outperformed are few amongst the mass that underperformed horribly, that lose everything. So every once in a while, I stream trying to encourage more rational behavior instead of talking about specific market observations or macro financial. So I come back to this topic. We're at that point. You know why we're at that point? Because I sense complacency. I sense calm in the market. And when there's calm in the market, there's always a calm before the storm. We know commercial real estate's going to blow at some point. So anyway, I'm not gonna talk macro, but the whole point is when there's calm, it's preceding volatility. What do you think the market was like in late 2019? And then we had the volatility to the downside with our capitulations in traditional finance and everything was falling apart. And then came May of 2020. And May of 2020 began a frenzy. But it started in late 2019. So that was a good 6 months. November, December 2019, you started to see tech. You started to see what Uniswap was doing. And now you have a wide array, a vast landscape of inspection to do. It's infinitely more sophisticated of a due diligence process that's required to understand what's going on now compared to late 2019. But now is that period of complacency. I'm not comparing now necessarily to late 2019. The overtones of just a calm market scratch the surface of how sophisticated and complicated things are right now. But we know for certain that when you have a calm market, there eventually will not be a calm market. So you need how to learn how to be calm in a market that's not calm. That's when you'll do better, better than worse. That's when you'll outperform. All right, let's go back to the main topic so I don't get lost in my thoughts. Time horizon. Time horizon with regard to outperformance and capital gains should probably be short if everything's up 100%, 200% in a week, you should capitalize really quick and capitalize before someone with $1 million and $2 million and a 10 million market cap asset capitalizes on you. You dump before they dump on you. That's the equation. That's why it's predatorial. So please remember that. Time horizon with a lot of the things we've talked of late is much longer. I have an infinite time horizon with regard to certain assets that we own, but it's a completely different paradigm, and size is critical in that equation. Um, you know, curve. Why play curve with the capital gains perspective in mind? The daily sell pressure means it's not going to appreciate 10x, 100x in a short period of time. It's not an asset to even consider from a capital gains perspective. Capital gains is just opportunistic, meaning you see a trend breach, you buy into that trend breach, it sucks capital in, and then you're able to sell against their buys. There's some really good examples of this. Um, Here, this is a great example of selling into. This is wonderful. Look at that. Boom. Somebody made a couple mil at the top here and drove it all the way down. But then you had a trend breach to the upside, and that attracted more capital. The side, I guarantee it. I guarantee it. So someone came in with it's a 15.5 million market cap asset. Someone came in with 1, 2, 3, $4 million. Look at the some of the slope. Let's see if we get candles. Look, you can see it right here. These are probably just one large buy, two stems of $1 million a piece, and they just made 40% in 3 days. They just made 600 grand, 800 grand in a couple of days, and that sucks all the air out of the market. And here's your capitulation of people with 500, $1,000. They're like, I just lost money. I'm out. It's not going to happen. I bought it for the wrong reason. Nice inverse head and shoulders potentially over the last couple of days. You know, could be an interesting entry speculatively. Um, Most recently, the deployment on Arbitrum is very interesting. I'm more interested in what it's doing on Arbitrum than Avalanche. I mean, that is a heck of a trend breach right here. You see the trend? Give or take something like that. And that was a bit of an inverse head and shoulders at the bottom there as well. But there you go, off to the races. Look at the difference in market structure. Come on, this you know how much one slam of $1, 2, $3 million. You know what? It's not that much. 3 million market cap. All right, 3 million market at most $1 million maybe, and then draws in all that activity, all that capital, and then you just sell it and you grab $1, 2, $3 million on 200, 300%. I should get to some comments, but goals. Let me hit on goals and then I'll hit the goals. You need to temper your expectations. Plays into goals. Goals are considerate of time and need to respect size. Your goal should be to not lose your money and to own things, but you have to own them at opportunistic price points. You want to own things that are productive. You want to own things that pay you. But you can't buy these things that pay you unless there's a good price, a good entry price. You want to balance, you always want to have cash available so you can capitalize on volatility in a direction that you like. Most people want to play the upside, so you do want to capitalize. Like if you saw this breakout, you can swim with the sharks, but do not have unreasonable expectations. You want your goal to be reasonable. If you take $1,000, it might be a little disappointing because this is up maybe 100%. Yeah, a little over 100%, 150%, 140%. Take profit at 50% and make 500 bucks in a couple of days. You need to set proper goals. $1,000 entry with the sharks. You got sharks in the water. Look at these red candles to the downside. Someone capitalized the shit out of this bad boy. So you're not going to get that 10x in a short period of time. And that long period of time, you're chasing the path that the vast majority head down that leads to failure. So to turn 1,000 into 10,000 is an extraordinary achievement. And you probably want to set reasonable targets of 10, 15, 20, 30. And you need to know find you want to find whales that trigger breakouts, and then the biological analogy comes into play. You're swimming with the sharks. So which means you need a goal that's less than their goal. If the shark wants to get 50%, you better hope you could get out at 25%, 30%. Because when they get out, you're no longer going to have 25, 30%. It's going to evaporate nothingness. So you need to set reasonable goals that have consideration for times, and you need to know is you're either capitalized on or you're capitalizing on someone else. But you're not going to be able to capitalize on the sharks. So that's the big shark, and you're the little fish, and you could swim next to the big shark, and that's cool and all. But you need to know when that you're the little fish, and you need to swim off. You need to get the hell out of there because some shit's about to go down. So you need to inspect. I'm going to hit the comments after this, but you need to inspect the transaction history. If you're dealing with pretty much anything on, in DeFi, you need to see who's doing what at what size. You need to inspect accounts. This is going to go to Etherscan, but if you do this, you copy and you go to DBank. Excuse me. And you can inspect their wallet. What do they have? What are they planning? What are they doing? This is pure Ethereum right here. But that is what you have to do. Uniswap.info, I think redirects here. So here's your addresses. Here's your transactions. You go to dbank.com, dbank.com, and this is how you inspect wallets. And you need to think, what are they thinking? What is their plans? What are their expectations? Their size. The size is obvious. You inspect it. What's their potential time horizon and goals? And that's how you get an edge in markets. Dan's in the house. A pleasure. Assume good morning. It's getting wild out there. It's true. Asarco, hey Cap, made a live stream. Title is right up my street. Time horizon is my greatest challenge to reconcile and key to my success in this space. My rational statement. Set goals with regard to your need to improve time horizon, and you'll get there. These statements, these rational phrases apply to not just how we engage with markets, but just how we think about strategy and think about just how we execute everything. What's your time horizon with regard to employment? What's your expectations from a job? What's your goals This is why they say, what's your 5-year plan? What's your 10-year plan? Set these things. Think about these things. Do not let next year without having expectations and goals and make sure they're reasonable. Because otherwise, if you have uncertainty, that leads to anxiety and frustration. If you do not know what your goals are and you're disappointed because you haven't met expectations, so you at least need to define your expectations to know why you're disappointed. And that alleviates anxiety, or at least pathway, at least gives you the opportunity to conceive of a pathway to achieve goals which would meet expectations. Kyle, hey Noah, can we touch base on the movement to denominate Middle Eastern commodities into non-US currencies? Yeah, let's talk a little macro. That's a good one. It's going to do nothing in the short term with regard to the dollar. The amount of global debt has gone up steadily until yes, it just goes up, and that's all dollar denominated. So the petrodollar is really what started a good portion of dollar hegemony. Um, Obviously, the Eurodollar system really sent it into hyperdrive, maybe more so in the most recent decades because of the amount of debt issuance. So there's more collateral, so they could print more dollar liabilities outside of the system. So I think that one, the petrodollar still is there. So that's a very powerful force that reinforces just the dollar demand. And even if the petrodollar was weakened 50%, 60%, the majority, you still have the amount of debt in circulation, amount of dollar denominated debt that requires dollar servicing. So that's not going away. So the petrodollar started this whole entrenchment of the dollar in the global system, but it's gotten to the point where it's self-sustained just by debt alone. The eurodollar system will sustain everything that the U.S. is doing under almost any imaginable circumstance. The amount of currency units that are needed to service this debt are astronomical in countless trillions of dollars. So, what have I said? U.S. treasuries are currency, create currency outside of the U.S. Um, so we've been in a very deflationary global currency regime over the last 15 years, going on 15 years, since 2008, which means there's not enough collateral in the system to create the amount of currency units that we historically were on trend creating prior to 2008. We've had a large disinflation, a reduction of countless trillions of currency units in circulation. And that takes a toll on the overall flow and velocity of the economy globally. Um, whether they're thinking about, I think they're thinking mostly geopolitically right now and just putting the brakes on everything, which reminds everyone, yeah, you need us. You need the dollars. You need the collateral. You did it to yourselves by creating all these dollar liabilities. But that doesn't mean anything with regard to the fact that you need our debt and you need our currency units. And outside the U.S., the debt creates the currency units. The U.S. Treasuries create the currency units. So food for thought going into the next decade. Now, these are the time horizons to be considerate of, Kyle. Next decade, check back in 5, 10 years, and we'll see how the global debt load, dollar denominated debt load is. I bet it'll be up, which means everything will continue just as it is occurring today. It will continue to behave the same way going into the next 5, 10 years. These are just moves signaling intentions. They're not going to significantly alter the structure of the system in the short term. Definitely not 1, 2, 3 years, 5 years. Will be interesting. Maybe we'll get a sense of something maybe occurring. These types of global macro observations and strategic geopolitical moves occur in a time horizon that's measured in not just years, half a decade, a decade. There's just much longer time horizons than most people are familiar thinking in terms of. I mean, look, in 20 years' time, there'll be a completely different political composition in the United States, around the world for that matter. It'll be a completely different world in 20 years' time. So I really like most recently, I've been thinking in terms of 6-month charts, and that's still relatively short term. I like these 6-month charts. Bit of a perverted system, the S&P. But DXY in a 6-month chart. This is a wonderful chart. This is probably one of my favorite charts right now because this you're talking 5, 10 year time horizon to get a perspective of what's going to play out over the next 5 to 10 years based on historic trends. We're at the point where there's collateral shortage globally, which means there's currency shortage globally, and that's putting all this deflationary pressure on global financial capital flows. They're going to have to devalue the shit out of the dollar and issue a huge amount of debt, balloon the national debt over the next 10 years, trillions and trillions of dollars to fund the rest of the world's dollar demand. And this is why the dollar depreciated after its rapid incline. This is the third cycle since 1968. We've been in a dollar bull market since January 2008. This is why the 6-month chart is so important. Let's go out further. Let's go out to the 12-month chart. It's even more visible here. Look at that. Dollar bull market since January 2011. That's where the bottom was. And it's just been up only on a yearly basis since then. Yeah, you had a pullback to the time weighted average price in 2021. But that is one heck of a candle. That's called a shooting star. From a technical perspective, that's a blow off top. We have a shooting star on the yearly. It's comparable to January 1985, in which case some sort of structural policy from a regulator standpoint was engaged, maybe an act of Congress, to structurally change the value of the dollar to facilitate systemic financial functionality. My expectation is over the next 5 to 10 years is significant depreciation of the dollar. Why? Because it's been a bull market since January 2011 on this chart. And from a 6-month chart, you could say it was even earlier. That was kind of like a double bottom, maybe, in January 2008. Here's January 11. Double bottom. Isn't that within 6 months? No, it's within a couple years. Anyway, point being, if the bottom was here and here's the top, we'll have a secular trend shift to the downside over the next 5 to 10 years. Look at the time duration. Look how long of a time duration this was. Date range. We'll go from here. We'll go from 11. Over 10 years. We've been in a bull market for over 10 years. Incredible. Oh, that's wild. So now, bear market. Folks looking at the monthly, the daily, you're going to drive yourselves nuts. Over the next 5 to 10 years, I expect the dollar to be lower than where it is now because this is the trend. And when the dollar goes down, that increases the purchasing power of foreign currencies, which generally leads to asset price inflation. Asset price inflation relative to what currency? You're going to drive yourself nuts. Asset price inflation relative to the current price point. Asset price inflation relative to consumer price inflation will also drive you nuts. So this is why Raul talks about multiples. He says like the S&P is flat, and that's the baseline. So the S&P in currency units, so that's here, ES divided by M2 is basically flat since '07. There's been zero relative appreciation of the S&P since '07. So it's pretty wild when you put that into perspective. But NASDAQ, on the other hand, there's your NASDAQ. '08, significant appreciation considering currency unit inflation. So the NASDAQ has significantly outperformed. And this is your, from a traditional equities perspective, this is how you outperform consumer price inflation. And you know my sentiment regarding stuff like tech equities and NASDAQ, QQQ in particular. So this is not where the opportunity is. It's the multiple that counts. And then Raul talks about how the crypto space is even more multiples than this. Yeah, I mean, if you just look at BTC, Jesus Christ. I mean, look at that volatility. Look at these wicks. But if you consider money stock price from, you don't have, if from '08, it's the whole thing. It's 5,000% to where we are, give or take. From four, was it 25,000%? Like 2010. So this is why the crypto space is a significant multiple more than tech equities. And that's why, this is exactly why we talk about the crypto space. This is where the opportunity is. This is why you have to have reasonable expectations and set rational goals and have decent time horizons. And you need to survive in the markets because this is where the outperformance is. This is where the capital will flow when exuberance occurs or where there's increasing liquidity conditions and folks have extra capital that they need to deploy. When I mean extra capital, I mean capital outside the US and they need to deploy it. Been sitting around doing nothing and liquidity conditions have improved. Outperformance. Capital flows from underperformance to outperformance. This is the market that's outperforming significantly relative to the change in currency units in a global perspective. That's the deal. Anyway, so as I said, in conclusion to that thought, as the dollar declines in value, that increases liquidity conditions outside the US, increases purchasing power of the not dollar. And generally, that's why you see the inverse correlation between the DXY, which is the euro and the yen, primarily the euro, and asset prices. Liquidity conditions improve in Europe, asset prices go up. They have more money, more value of their money denominated in dollars. So they have more purchasing power, which also means energy prices are a very complicated part of the equation. Most energy prices are dollar denominated. So as the dollar comes down in value, the euro can now buy more oil denominated in dollars because the euro is more valuable relative to the dollar, therefore relative to energy. And that means they are spending less euros for their energy needs. Therefore, they have extra euros. What do you do with extra euros? Can't just let them sit around because they're going to devalue relative to the fluctuations and the volatility in available currency and liquidity conditions around the world, central bank policies, so on and so forth. So they can't just sit, they have to do something. They have to be put to work to be productive. Outperformance, that's where capital flows. This is the market that interests me overwhelmingly over the next 5 to 10 years. Raul's in the house, Slendo, Lake Meadows. Peace, Noah. You have a good one. Appreciate it. I just rewind this video. I know that it was a little slow in the beginning, but I was trying to be very precise and tell a decent story about, or tell a story that someone who's never heard of the shit that we talk about would potentially be able to hear. You know what I mean? Because most people can't hear the stuff that I just talked about regarding macro. Hear meaning process, understand, appreciate. The macro shit is overwhelming. And when I talk about the monetary policies and the tokenomics of shit in the crypto space, it's overwhelming. People are like, what coin do I buy? And you can't do that. You need to start at the beginning. You need to start slow. You need to set reasonable expectations and have rational goals. Crypto 2, been sharpening skills in this market, ready for the bull run. Yes, I like that statement. Even I am always refining my my models, my views, my perspectives, my narratives, my theses, my theories, my stories, and whatnot. And that plays into what behavior, what will you do when there's outperformance? If you start to see this chart significantly move up, what are you going to do? I mean, look at Arbitrum. That's another story because that thing is outperforming. But stables, you go to DeFi Llama, you go to the stables page. When you start to see 10% week over week on all, or even primarily Ethereum for that matter, because it flows from Ethereum, you start to see that flow of liquidity into the system. What are you going to do? Don't want to be in a frenzy. You don't want to have the anxiety. You need to have a plan. And if you don't have a plan, you don't do anything. You wait. You don't just act on emotion. Be strategic because we could do better. Snake, sir, sell in May. Maybe. April, Michael Gaia likes April. I like what he talks about. He's got a good sense of the markets. I mean, look, commercial real estate can explode. There's plenty of things that could explode. The BTFP is causing all sorts of distortions, all sorts. There's plenty of reasons for volatility, both to the downside and the upside. A credit event, what happens in a credit event? Intervention. So the credit event causes all sorts of forced selling. People are like, no, this shit's done, and the forced selling, and then they come out with the BTFD, the buy the failed dip program, or FOMO, Federal Open Market Operations, and they start trading in the equities markets. So, it's like Luke Roman's wheelhouse. They're past the Rubicon. If they don't intervene, the system's done, and we have chaos in the streets. And the requirement for government and financial regulators is that there is a government and is a financial market. So if they let deflation occur, it's over. The party's over. That's it. It's just chaos. Everything breaks down. ATMs don't have cash. Banks don't open. Supermarkets don't have food. Supply chains are done, and it's chaos. It's anarchy. It's post-apocalyptic. That's deflation. Inflation does a similar thing. So what the governments like to do historically is have controlled inflation. Thus, the Fed's 2% target, controlled inflation. That's why they do that. That's why they head in that direction, because that's how you kick the can. That's how you perpetuate this type of debt-based financial system, where the vast majority of currency in circulation is credit. Digest that one. Took me a couple of years to digest that one. Vasco, thank you. Appreciate it. I tried my best. Talman, what are your thoughts on STG? Can you look at the chart? Let's take a look. Love those boys and what they do. Heck of a team. Cool. Good looking chart. That's a good looking chart. It's not a good looking chart when you zoom out. Now bear in mind that's also the 4 hour, so that's going to throw anyone off. Let's go out to the 12 hour. I don't know. Capital gains, maybe short term. Look, there's your target. If you get a breakout of what? Here. I'm not a TA guy really, but look for someone to slam some bucks. I mean, right about now, actually. Look for a big market buy that drives it to like 80 cents and someone slams in a couple mil. No, this is 1.6 mil. Okay. Someone slams in and moves the price 10, 20, 30%. Someone slams in 200 grand, 300 grand and ride their wave. 300 grand, you could ride the wave, maybe 20, 30% to $1. But you want to get out before that person who who bought gets out, because otherwise they take all the profits. But this is in prime breakout territory. I mean, look at that from a technical perspective. But you need the big market buy. You need the big actor that wants to capitalize. Actually, this isn't a bad. Now the question there is size. Do you have enough size to capitalize? You know, maybe. Yeah, might have enough size. But I think with the size that I have, can I capitalize to the degree that I want to? Can I set a reasonable expectation? And do I even want to take the risk because I need the capital because I pay bills with that capital? A big learning lesson is to think of your stable coin, your bank account. Don't you want that number to go up? So you take that risk. Can you take that risk? Is it reasonable? Which is why you need to set targets. 10, 20%. 10, 20% on $100, on $1,000, you make 200 bucks. Is it worth it? You need the $1,000. Things like that. Complicated equations. But I like the protocol obviously, and this looks actually quite good technically for a bit of a bullish action. You could wait for the large actor, as I said, to move the market. That would be a sign that would draw in other capital, and he gets some outperformance like we've seen of late here, which has been hot. And Grail has some very interesting volatility as well. Anyway, Eras, hey Noah, hope you're well. I know it's not related to the topic of the stream, but did you see the CDS spike on 1-year government bonds? Yeah, I don't know really what to make of the default swaps on U.S. debt. I mean, if the U.S. Treasury, U.S. are not risk-free, Europe are. So I don't really understand why the CDs are doing what they're doing. The U.S. can't. If they do, I don't get it. It doesn't equate or it doesn't compute in my mind. If there's any change in the risk profile of U.S. debt, the amount of potential deflation is catastrophic. If you have $200 trillion worth of dollar liabilities that you know just start to have inflation risk or volatility risk, I mean, I don't. It doesn't compute in my mind. I don't know. It's a good point. Good observation. Hey, Noah, I saw your tweet about owning BTC. Curious if it's a recent purchase or a hedge. Okay, great. Thank you for bringing this up, Adam. I own Bitcoin. I got a couple of bucks of it. It's not an investment, it's cash. I have it because if I don't have any, I don't have any. I have like 8 grand worth of Bitcoin. I have a fraction of a Bitcoin. I've been tempted to just bump it to one for the shits and giggles. Do I care? Do I what's the point? I can't spend it. Nobody accepts Bitcoin in the United States. Sure, if you move to El Salvador, you can spend Bitcoin. Is Bitcoin liquid with dollars? Sure. Can Bitcoin do 1x, 2x, and you'll have more dollars? But is that the point of buying Bitcoin? To have more dollars? So the point of Bitcoin is to opt out of dollars. So I bought Bitcoin to have some. I didn't buy it to trade. I didn't buy it to outperform the dollar to preserve my purchasing power. I didn't buy it for any of those things. If I want to preserve my purchasing power, stuff like FPI is probably more interesting than Bitcoin in my mind. The dollar's not going anywhere, we just discussed with the global debt situation, dollar denominated debt. Dollar's going nowhere. So I'm in the camp where it's best to play the system, to play, but by the way the system is currently structured. There's no, oh, the Bitcoin standard, and it's going to change overnight. That doesn't compute in my mind. Not with hundreds of trillions of dollars of dollar debt. It, that doesn't evaporate. If that evaporates, there's anarchy and a post-apocalyptic movie scene. And then it doesn't matter what you own because there's no supply chains. Who gives a shit if you have Bitcoin if there's no food in the supermarket? So What matters is Friday. There's your time horizon equation. Everyone's like, I'm going to do CA, and eventually, Bitcoin standard is everything. Well, what's the time horizon on that? 10, 15, 20 years? What about Friday? So, fine, I have a little bit for 20, 30 years down the road, but capital management needs to have a time horizon that targets ultra long term, but is you also need to service your short-term livelihood. You need to do well for now, well for Friday to take care of yourself and take care of your family. So that's my time horizon right now. My time horizon right now is on a weekly basis. Did you make money on Friday? And I think that is a time horizon that will serve most people well. Slendo, the chart you were looking at. Oh shit. Oh, I'm sorry, guys. I didn't show I went through half the damn stream not showing any of the charts. All right. Is what it is. I was showing Grail. I was showing. I'm not going to go through it all again. That's disappointing. Sorry, Raul. I'll save it for Monday. You can remind me of the charts I didn't show you on Monday, but at least you heard everything I was saying. I can't help with the choppy stream. Everything should be fine. It's good on my end. I got good bandwidth. Um, Crypto Jake's in the house. Pleasure. I know it takes me a while to get through the comments, so by the time you guys are commenting, I'm talking about old shit. Yes, I know, Reg. I'm sorry. Adam, is it reasonable and rational to expect the incoming commercial real estate crisis to also cause general crash in real estate? Well, sure. Forced selling begets forced selling. Second, anything needs to be sold. It's going to psychologically impact the rest of the market to sell things. So that's how you get your crises that just cascade through the system. You always need to be prepared to buy blood, especially if there's an opportunity. And my sentiment nowadays is stuff that's going to pay me at a discount. So that payment will probably depreciate in such a circumstance. Um, but the rules of like capital goes from underperformance to outperformance. What is the system where capital will flow to? And will that system pay me? So there's not many systems that pay. There's some interesting potential opportunities in equities markets with regard to dividends, but they're few and far between, and I don't trust people. I don't like boards. I don't like people. I'm sorry. So I don't like most companies. I don't trust them. I don't trust people. I trust software. And I trust immutable software that cannot change. Brian, I've been following you for 2 to 3 years. My emotional intelligence and just overall character has grown from listening to how you manage yourself and your money. Thank you. I appreciate it. It's been a long road, and you could obviously tell if you look at some of my older content, it's the content has changed significantly. The story has changed significantly. Sorry about the chart, Ryan. So Crypto Jake, same thing. Ryan, same thing. Yep, yep. Eduardo, uh, what can we see and learn on your Discord? Well, the point of the Discord is a community of people that have found me over the years that share a similar sentiment with regard to rationality, prudence, due diligence, same types of investments that we're interested in. Everyone on the stream loves cash flow. So we really focus on stuff that pays us on Friday, not in the future, not stuff that we necessarily have to sell, but we like things that we could bank on Friday. As in this Friday, get paid $500 a week, dollars that you could use to pay a car bill, $350 a month lease. And if you made $500 this week, you could pay your by clicking a claim button, which is basically a dividend from a productive cash flow positive enterprise. And that's what I like. And that is what many people like. And that's the good part of the conversation. But obviously the history of Discord, our Discord has a lot. We talk about legal matters, macro matters. I talk about trust structures over the years to have favorable tax treatment and stuff like that. So there's a whole lot of content on Discord. It's not for everyone. There's no magic bullet. I'm not one of those stupid streams like, yeah, buy this. It's the next 10,000x big boy shit. We don't really do the TA anymore. We used to do it much more. Um, I was talking about Stargate, and I showed you guys the TA, and I didn't have it on the screen. But so here's, I mean, look, that's TA. It's a trend structure. Everyone sees the trend structure, therefore everyone responds to the trend structure. And I was telling you guys on this one, that's a break. That's a trend structure break. So you could have someone come in with a $1.6 million liquidity with a couple of hundred grand, 200 grand, and that's going to give you a nice spike in the market, and that could psychologically start the process of attracting smaller actors and more capital to flood in, and 70 cents, 100 grand, you sell it at $1, you made 25, 30 grand in a couple of days. Set a reasonable target, and well, that's if someone deploys 100 grand. But that's how you have to think. If I deploy 100 grand at 71 cents and I sell at $1 and I capitalize $25,000 in a couple of days, you need, as a smaller actor with 5 grand, $1,000, you need to think about the larger person and what they're going to do. In this market, why would a larger actor hold on to a position and take on additional risk? Someone else may potentially sell on them. So if you could capitalize that amount of money in 3, 4 days, you probably want to sell before they do. So this is why you're inspecting stuff like this, uh, like Uniswap, and you see the transaction history for the LPs. These are the transactions, so you could see recent transactions. But you really want to see the addresses, and you can see that also on the deck screener as well. But you want to inspect the wallets to get a sense of maybe what they're thinking and what their intentions are. If someone with $100 million buys 100 grand worth of STG, you could probably think to yourself, they don't really give a shit about 20 grand in 3 days. So they probably just bought $100,000 worth of STG for shits and giggles, and you have more of an alignment with them because they're pretty much, they're not going to, if someone with $10 million buys 100 grand worth of STG, they are not selling for 20 grand worth of profit. They bought it because they wanted to add that to their portfolio. Okay, so this is why if you inspect wallets, you get a sense of what someone may be thinking. But if someone with a $500,000 portfolio buys $100,000 worth of STG, they are much more likely to take a $25,000 profit swing in 3 days. It makes sense. So the size of the portfolio has meaning in the context of the size of the position and the potential time horizon that that actor will have in mind with their position. Hope that helps. um, Cap, yeah, I fixed that at this point. Tapsy, bit late to the stream. Have a good weekend. You too, my friend. Always a pleasure. Let's wrap it up for a Friday. I'll see you again on Monday, so we'll continue this topic. Ping me. Let me know if there's a topic you want me to talk about. I'm more than happy to just hear off for an hour about macro conditions and what the hell is going on in the markets. Friday, March 31st at 12:37 p.m. We want to subscribe. We all do a little bit better together. After party in Discord, links in the description below for the most rational community in the entire crypto space. Y'all have a good weekend. Stay rational. Peace.